Welcome back to Yahoo Finance Live, everyone. Still some time before the opening bell here on this Thursday morning or Friday's Eve. As we continue to recap yesterday's decisions by the Fed, let's check in on the major averages with Jared Blikre over at The Interactive. What do you got for us, Jared?
Well, I was looking at our currency board first because that's where a lot of the action has been, and we've seen this driving. Now, the U.S. dollar has been on a tear. Overnight, this is after the Federal Reserve raised interest rates by 75 basis points yesterday, raised the expectations of that terminal rate via the dot plot. After that happened, the Bank of Japan, they intervened and they sold some yen to buy, or excuse me, they sold some dollars to buy yens, and they have $1.3 trillion worth of hours. So that gives them considerable firepower. Now, they haven't intervened in their markets since about 1998. That was during the Russian debt crisis and also long-term capital management. Anybody remembers that required a bailout orchestrated by the New York Fed, but I digress. Here's the U.S. dollar versus the Japanese yen, and basically if it's going up, that means a stronger dollar, a weaker yen. That's what's been happening all year long, but this is the two-day price action. Overnight, we saw this huge drop here. Now, this looks very dramatic, and it is pretty dramatic right here, but we've seen bigger interventions in the past. The Swiss franc pegged to the euro. So all in all, I just want to show you a year-to-date chart. This doesn't even look like a huge move with respect to what's happened so far this year, 23%. The biggest concern is that Japan, their currency has been trading basically like an altcoin, as has been many other developed currencies around the world, not to mention emerging markets, guys.
Speaking of emerging markets, I'm just looking at the list of central bank actions today. Like South Africa raised interest rates. I think the Swiss National Bank raised interest rates.
A couple days ago, yes.
And then there is Turkey,
yes,
as well.
The Turkish Lira,
yes,
the gift that keeps on giving.
Right.
Let me pull up a chart of the Turkish Lira. This is year to date. You can see it's up 30, or the U.S. dollar is up 37%. That means the Turkish Lira has lost roughly a third of its value. Now, overnight, they cut rates. They cut rates by 100 basis points. And if you've followed what's happened with the Turkish Lira in years past, this has been par for the course, not a new strategy. When everybody else is cutting, or excuse me, when everybody else is raising, they are cutting and vice versa. Nevertheless, their currency has been under a tremendous amount of pressure. Here is the last 5 years, and you can see a lot of fireworks with respect to the end of 2021, but they're bumping up against some all-time lows in the Lira, all-time highs in the U.S. dollar. And it's not just the Lira, it's other currencies around the world, although they are not cutting. At least they're following the bandwagon here, guys.
Yeah, I know that philosophy among the Turkish central bank has been controversial, shall we say. Their inflation fighting is a little bit counter to what everybody else
Inflation encouraging.
Yes, something like that. All right, thanks, Jared. Appreciate it.